You've studied the fundamentals of the stock, you've analyzed the prices, you've placed the order on the stock exchange, and this order gets executed. What happens next? In this video on the trade life cycle, we're going to take a look at the post trade activities. These are supplementary materials to the trade life cycle video 1.0 that I have already uploaded a few months ago, the link of which is shared below. This video is going to explain in great detail who are the participants. So are you ready to understand the journey of a trade from order to settlement? Equities is the second largest traded financial asset in the world. Do you know which is the first largest traded financial asset in the world? Yes, it's foreign exchange, simply because foreign exchange markets are global in nature and they operate almost 24 hours a day. The top three equity markets in the world are the New York Stock Exchange, followed by yet another American stock exchange, the NASDAQ, and then we have the London Stock Exchange. These three markets dominate the equity markets across the world, and therefore we find a lot of investment banks like Goldman Sachs, JP Morgan, Wells Fargo, all listed and being market makers on these stock exchanges. The markets are divided into two categories: the primary markets, which comprise of stocks that are being issued to the investors for the first time, and the secondary markets, which is a stock exchange. Stock exchanges are self-regulatory organizations where stocks get listed. There's a board of governors, the board of members who govern the regulations of the stock exchange. And like most markets in the world, the stock exchange is also regulated by the capital market regulator. In India, the regulator is SEBI. In the US, it's SEC. Let's take a look at the participants of the stock exchange post the trade. Okay, we're going to analyze post trade activities. The participants include an STO, that's the Securities Trading Organization, a depository, the custodian, and a transfer agents. So let's analyze the role of each of these entities. A STO is also a securities trading organization, is identified as a registered entity with a license to trade on New York Stock Exchange. The STO could either be an investment bank, it could be a commercial bank, or it could also be an independent market maker without a banking license. Okay, so the examples of an STO could be investment banks, commercial banks, or even market makers. A video on market making has already been uploaded, as well as Prime Broker has been uploaded sometime in the past. Some of the examples of STOs that come to my mind in the global market sense are JP Morgan, Bank of America, Citi, Goldman Sachs, amongst others. Now let's analyze the role of a depository. The depository is an entity which is responsible for immobilizing the stocks. Stocks get immobilized, physical stocks get immobilized at the depository, and they are assigned a new number to each and every stock that is traded on the New York Stock Exchange. The depository is largely responsible for settlements of all trades. Okay, so when you say that a stock exchange trade does not fail, it's not the stock exchange that is responsible for it. The stock exchange is just a trading platform. It's the depository that's responsible for it. It's the depository that's responsible for settlement of all trades. In the New York Stock Exchange, the depository is NSCC, that's the National Securities Clearing Corporation, which is a subsidiary of the largest depository in the world, that's DTCC. In India, CDSL and NSDL as are the largest, they are the two large depositories. Examples of depositories across the world is NSCC, NSDL, CREST, and JASDEC. Do you want to know which depository is of which stock exchange? Let's try. Let's try this one, okay? Just to pick on our brains. NSCC. Do you know which stock exchange is the depository of? Yes, it's the New York Stock Exchange. NSDL, if you're in India and you're trading on all your trading apps, then it's indeed NSC, National Stock Exchange. CREST is the depository of the London Stock Exchange. Now, CREST is been taken over by Euroclear, and collectively they conduct the settlements on the London Stock Exchange, and JASDEC is the depository for Tokyo Stock Exchange. Let's take a look at what are the participants. Custodian. Who is a custodian? A custodian is one who acts on behalf of the STO. It holds and manages the portfolio. The STO owns the portfolio. The custodian manages the portfolio. The STO buys and sells securities. The custodian holds and manages those securities. The STO could be a fund house like a mutual fund, a hedge fund, a pension fund, etc. But it will necessarily appoint a custodian to manage the portfolio. So what do we mean by holding and managing the portfolio? It's responsible for the settlement of all trades. So every time the STO buys securities, the custodian responsibility is to ensure that they receive the securities. Every time the STO sells securities, the STO custodian must deliver those securities before settlement deadline. It's responsible for collecting all corporate actions like bonuses, stock splits, dividends, etc. in client portfolio. Let's take a look at what is a transfer agent. In India, we call this as a registrar. For example, a Carvi or an Ink Time. Okay. A transfer agent, on the other hand, is a legal entity that acts on behalf of the issuer. It manages and transfers the ownership of securities from the seller to the buyer. It's also responsible for ensuring the calculation and distribution of corporate actions. The registrar is responsible for all investor relations. Okay, so now we have four distinct entities: depository, custodian, STO, and transfer agent. How do they work with each other? How do they liaise with each other? Let's see that. Okay, at the very beginning, how does the birth of a security take place? The investors give capital to the company. The company issues equity in return to the investors. So investors have trust in the company, they believe in the company's growth prospects, etc. They contribute capital to the company's equity, and the issuer then gives equity to the investors. This equity is dematerialized by the depository, and therefore it comes into our accounts or into the investor accounts in a dematerialized or an electronic form. Let's say the issuer therefore appoints a transfer agent to keep a list of all the updated records of all the investors. The investors appoint a custodian to manage and hold the portfolio. So if you are very clear about in whose interest these entities are working, you'll be able to understand the flow really well. So transfer agent works on behalf of the issuer, the custodians work on behalf of the investors. Let's say the equities are listed on a stock exchange like the NYSE, LSE, Tokyo Stock Exchange, etc. And the stock exchange appoints a depository. Every stock exchange has a depository. There could be a single depository for multiple stock exchanges. There cannot be multiple depositories for a single stock exchange yet, because then it kind of becomes redundant in terms of the range of activities that they do. So is this clear? To repeat, the transfer agent works on behalf of the issuer, the custodian works on behalf of the investor, the depository is working on behalf of the stock exchange. The stock exchange depository must liaise, must be in connect with the transfer agent to ensure that the securities are transferred from the seller to the buyer after the transaction is executed. The depository must also work with the custodian to ensure that monies due or securities due from the STO's account are deposited before settlement deadline. So the depository, in effect, is responsible for all settlements that take place on the stock exchange. The trade life cycle, now that we've understood the participants, let's take a brief overview of what is the trade life cycle. The trade life cycle comprises three distinct steps: the front office, the middle office, and the back office. The middle office is shortened, abbreviated over here, not abbreviated actually, shortened to write it as mid office. Let's take a quick look at each of them. What happens after the trade? The trade life cycle comprises three distinct steps: trading, clearing, and settlement. Okay, these three steps comprise the comprehensive processes that are involved in settlement of a trade. In stock markets like India, which have a settlement of T+1, this takes place within T+1. The trade activities can be classified into pre-trade, trade activities, and then the post-trade activities. The pre-trade activities could be stuff like putting in place market risk, credit risk limits, which is largely done by the middle office. Okay, so what is needed to be done before the trade? All right, you just don't go and trade, right? You have to analyze the stock, you have to study the stock, research the stock, you have to understand the ratios, you have to look at the numbers, you have to look at the charts, and then you have to decide whether you have the money to buy the stock, etc. So all these are pre-trade activities. Teams in the research and analysis, compliance, etc., all help the traders execute the trade, which is the front office activity. Trading is a function of both client orders as well as proprietary trades, which is largely done by the front office of the STO. And then we have the post-trade activities, which are a combination of both middle office and back office, because here is where, if things could go wrong, they could really go very, very wrong. The pre-trade activities include credit risk, market risk limits. So, for example, the bank cannot, buy infinite amount of dollars or infinite amount of JPY. The trade activities include trade execution and trade capture. The post-trade activities include enrichment, validation, and so on. I will be uploading a separate video, Trade Lifecycle 3.0, on each of the steps in this slide. Okay. The post-trade activities include trade data enrichment. This includes analyzing and enriching the data to find out more about the client details. Then you have to validate the data to ensure that it fits into the credit risk and market risk limits of the STO. The trade has to be reported to the regulators on a separate basis, on a weekly basis, on a monthly basis, depending on how simple or how complex the trade is. Settlement instructions have to be passed on from the STO to the custodian for delivery of funds/delivery of securities. Finally, the STO has to make the payment for the securities or paying in the securities. This is called as clearing. The stock exchange matches the pay-ins on a DVP basis, that's delivery versus payment, and then the settlement is made between the two STOs. The payout takes place. As I mentioned, these 6 to 7 steps will clearly be explained in greater detail in another video. For now, you have learned what are the role of the different participants in the stock market, as well as what is the brief of the front office, middle office, and back office functions. Finally, we end with reconciliation, which is an accounting function, because reconciliation helps the custodian and the STO stay in control of the assets, like funds or securities that they own. Thank you so much. If you have any queries, please post in the comments box. If you're interested in a career in fund accounting, corporate actions, trade life cycle, and OTC derivatives, please subscribe to my YouTube channel. I'm also sharing my email ID in case you have any questions. You will please send them to me. Thank you so much for watching.